So, hello everyone. Today we'll be talking about BSE, which is Bombay Stock Exchange, and why I think it's the best capital market play in the market right now, in the listed market at least, and also including the unlisted market actually. So, we'll be looking at what's happening with BSE, why the share price has, done what it has done, and what is the future outlook for it. So this is not financial advice, as always. You have to do your own research. If you have to make any investment decision, you can consult your financial advisor, whoever you refer to. So BSE had a very small market share, less than 5-6%, and NSE had like the rest of the market share, 96%. So there are only two exchanges in India, as everyone must be aware. Earlier, what used to happen in the options market is that in the derivatives market, which is the cash cow of the exchanges, that's where the exchanges make the most money. So what used to happen was that out of the 5 working days of the week, 4 days were of expiries of NSE, and on Friday there was BSE. So overall, the options market was dominated by NSE. It had over 95% market share, as you all know. But something very big happened recently in around September of last year. BSE shifted its expiry day to Tuesday. And it's pretty sure that they'll be doing it on Tuesday now. They are doing it on Tuesday. So around this time, the SEBI consultation paper on this also came around, and what happened was that BSE was actually gaining market share from NSE very slowly. It's not very slow actually, but not as fast as it will be now. So SEBI basically said that stop doing expiries on 4 days. You should just do it on 2 days a week, one for BSE, one for NSE, and this dynamic essentially shifts the market share artificially. So if there were no restrictions on when you could have an expiry and on how many days, how many expiries, maybe NSE would still dominate the market. So because SEBI is essentially saying that you have to stop or at least limit the gambling, excessive gambling that's going on in the options market in India, they're now saying, okay, one day for BSE and one day for NSE. So this environment is very, very good for BSE to gain market share. And this market share shift is not something that will take, let's say, 5 years to happen. This shift should happen basically very quick. You should see the results in a quarter or two. So this is exactly what has happened, and BSE has been gaining market share from NSE in the past quarter, and it will also likely do so in this quarter based on the options data that has come out for the month of January, February, and March. So in response to this, NSE was actually saying that I'll do my expiry day on Monday, which is very close to BSE, so it will compete with it aggressively for the option space. And this led to some negative price action as well recently for BSE. So if you look at BSE, this was the day. This I think this was an 18% move with high volume when they announced that okay, when it was pretty clear that okay on Tuesday the expiry will happen. Following this, the stock went from around 3,000 to 6,000. So after this, in February, NSE essentially said we'll be going to Monday, and it again went back to 4,000. But on 28th of March, so this is a 28th March article, and it essentially is saying that okay, BSE again surged 18% on this day. So essentially, SEBI gave a proposal that one day each, Tuesday and Thursday, Thursday for NSE. Following which NSE was like, okay, we'll hold off for now. We won't move to Monday. So you can see very clearly that SEBI wants there to be not a monopoly, somewhat artificially, I guess. So it essentially wants an environment where both guys have equal footing to compete for market share. One day for BSE, one day for NSE, and not too close, because that does not make so much sense if they start competing that aggressively. So after hearing all this, three questions should come to your mind. Firstly, how big is this change? How sustainable is this change? And how much of it has already happened and how much is still to go? So this is the NSE investor presentation for the third quarter of FY25, which is for the months of December, November, and October last year. So in the equity option segment, NSE had a market share of 87.5%. So the rest was with BSE. And at the time of this article, which was 28th of March, it's pretty recent, BSE already had 18-19% market share and NSE had the rest. So you can see that the change is very, very quick. And a lot of this change is yet to happen. It is going to happen very quickly, but it's already above 20%, the market share of BSE. It's well over 20% now. So what does that mean for the earnings of BSE? If we look at, the annual earnings, last year it did 1600 crores in revenue. This was with a very, very low market share, uh, and a net profit of 772 crores. But you should normalize this because there was another income of 500 crores. You should remove this and then see what the net profit was. So this year, BSE should do well above 1100 crores of net profit because the expenses don't scale as much as the revenue. So for context, NSE already has a 50% plus net profit margin. BSE should also move to that territory. So how much market share BSE will gain exactly, that is still not clear. You can track this information every month, every quarter, basically. You can just go on the BSE and NSE website and see what the volume data is for every day. So I like this situation a lot because the relative change is very large, it's sustainable, and the options market itself is growing very quickly. So in the recent 2 quarters, the options volume has come down a lot, impacting the revenues of NSE. NSE actually had a degrowth of revenue in a quarter on quarter basis, while BSE actually had a rise in revenue. So BSE is clearly gaining market share, and regardless of if the options market does well or not, BSE should do better than NSE. Another big shift that is happening is that capital market stocks were always looked at in a from a perspective of being, having cycles, having very exaggerated cycles. But that is seemingly changing now, and because equity as an asset class is emerging and it's more stable now, and even equity flows are relatively, more stable compared to what they were, let's say, 5 years ago. So as capital markets mature, the way the market looks at these stocks will also change. And if there's low cyclicality, the valuations have to go up. So capital markets is a very attractive segment, as everyone knows. But other plays such as the RTAs, let's say KFin Tech, CAMS, all these guys, although you can argue that yes, KFin Tech is gaining some market share, but it's not as aggressive as BSE and NSE, and the change is not as large. So currently BSE has, let's say, a 20% market share. If this moves to 40%, uh, this is 100% shift in, let's say, 2-3 quarters. But I don't see a similar shift happening in KFin Tech or CAMS between these two, or in, let's say, these depositories. So all this is basically reasons why I think BSE is a very, very good play right now. And I won't go too much into the valuations because that is for you to do. It's not something very complex, or it's just something that you can just divide the market cap, I think around 75,000 crores. By this year, they'll do, let's assume, 1100. And next year, it should double. So 2200. So if it's 2200, it's not a very, expensive 1 year forward valuation, considering that the overall options market should also grow in the next 2, 3, 4 years. So this was me comparing the capital market plays in terms of the market infrastructure plays, and the wealth management and asset management players. They're a separate story from these, as their competitive landscape is also a bit, less regulated than at least exchanges. So this is again not financial advice. You have to do your own research. And for wealth and asset management plays, I think I might make a separate video on those because they have a very sustainable growth story as well, which is not as cyclical as the market is pricing them to be, in my opinion. So, for example, Novama, it trades very cheap, and that is fine if the market assumes that they're as cyclical as, let's say, some brokers, let's say an angel one. So for brokers, the volume just disappears when there's a bear market. But for Novama, so far, I mean, we'll see this quarter as well what happens in Novama. But the inflows, they're not as cyclical as, let's say, trading volumes in a broker. So that is all for today. Thank you.